Feeling ready to start investing? It's a good idea to ask yourself a few key questions before diving in. Check in on your overall financial readiness, investing goals, time horizon, and risk tolerance level. Why should you check your financial picture before you invest? Investing can help you reach your financial goals. The sooner you start, the more time you will have to let compound interest work in your favor. And with more time you'll be able to navigate the ups and downs of the market with greater flexibility. However, make sure your finances are investing ready first. Before you get started, consider the following. Your monthly cash flow. Better yet, have a budget. It helps to know how much money you have available each month to put towards saving and investing. Your budget can help you figure out where your money is going and whether there are places you can trim expenses to find more money to save. How much you owe. If you have high interest debt, for example credit card debt, it will likely accumulate more interest in the short term than any investing gains. Make a strategy to pay down debt before investing. How much risk you can tolerate. The risk-return relationship is important for any investor. Generally, the higher the potential return of an investment, the higher the risk. But there is no guarantee that you will get a higher return by accepting more risk. Risk tolerance is personal, so it's good to know yours before you commit to an investment.